You can look at it two ways. You can say, oh, I don't know what I'm doing, or I'm not good at this, or I lost 100,000. Or you could say, like you said, I actually saved myself 900,000 because on the $1 million deal or the $5 million deal, I've now learned this lesson. And that's what a great entrepreneur does, right? Is they take a situation and they reframe that into something that becomes a lesson or a positive pivot to move forward.
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast. What's up, y'all? Welcome to the Legacy Podcast. Tim Bratz here. Today I'm sitting down with my boy Dirk Van der Velde out of the West Coast. He's a developer, owns a company called Momentasize. Comes from a family of some entrepreneurs, some real estate, and realized pretty quickly early on that the corporate world wasn't a good fit for him, and he wanted to control his time, control his money, and now he's developing multifamily. He's developing single family for sale, for quick cash. He's developing multifamily for the long-term wealth building aspects. And today we'll be diving into all of those things. Why he does each of them, why he doesn't just focus on one, why there's so many different benefits of doing both of those things. And then, all the stuff that we're talking about that's relevant in today's market and today's economy of what's going on with the supply chain, what's going on with the labor force, how do we keep things on time, how do we keep things on budget, where do we see the market going as he's building new things and building townhomes and building apartment buildings, and how is that going to affect the supply and the demand in the United States on the housing supply over the course of the next several years. So let's dive in. Dirk, what's up, buddy?
What is going on, Tim? Thanks for having us on. We share the same obsession, which is building wealth through real estate, and I'm just excited to dive in with it.
Dude, I'm pumped to have you. So why don't we start here? Why don't we first, I'd love for you to take a couple of minutes and just give a high level on who you are, what your background is, how you got to where you guys are today, and what does your current portfolio or business look like?
Yeah, so far from a self-made man, I was blessed. I'm so grateful with a built-in infrastructure. I have a beautiful family. We grew up in the Netherlands, so we're a Dutch family that migrated over to Bend, Oregon. That's where we live today. Migrated over to Bend, Oregon. My father has been a dreamer his whole life and always executed on it. And my mother is one of the most supportive, just absolutely organized and loving mothers you could ever have. They're actually business partners. And so my dad will come up with the big dream and my mom will put all the pieces of the puzzle together of how to actually make it happen operationally. We always joke, we have a resort that they worked really hard on together with their best friend, Willem Willemstein. And we always joke that if it was just up to my old man, you'd have a bunch of half-built buildings. And so the combination of the two together is really a superpower. So I was able to watch my parents dream and then execute on their dream. Anyone could be a dreamer, but I watched them then execute on that. That, of course, gave me an amazing infrastructure to learn, to see what it's like to be a big dreamer and execute on it. And then about 5 years ago, my wife and I, after we had our first kid, we decided that we wanted to go and create our own generational legacy. So I just looked at the skills that I was able to acquire, the infrastructure and relationships that I had, and we started Momentasize Construction at that time. We do ground up development. So we do single family stuff. We do apartments, both market rate and affordable. And then we do master plan communities as well. We're involved because of my family. We're involved in the master plan communities. And, it's been a great journey. It's something that now we've gone from just my wife and I wearing all the hats to now growing it to 13 employees. And we're just getting started.
Dude, that's amazing. That's really, really powerful, man. So you're doing two things. You're doing build to sell and you're doing build to rent. Why do you have both of them? Why not go all in on the long-term stuff versus still doing the transactional things?
Yeah, great question. The way I look at it is, to build generational wealth and a generational legacy, you need two things. You need cash so that you can buy assets, right? So I just look at what skills do we have? Well, we know how to buy land for the right price. We know how to build, and there's plenty of demand where we live. There's a lot of demand for new housing. There's just we're living a destination town in Oregon. There's a lot of people who want to come here, live here still, depending on what you think. They still want to come here. They want to live here. And so we'll go and use that strategy, the buy land, build from the ground up, and sell the houses to create as much cash as we can. Then if we're doing a good job of that, right, we have a we have another challenge, which is what do we do with all that money? And our whole strategy is make as much money as we can over here by building and selling houses and building for others. Our general contracting business also builds for other developers. And then we just take as much of that capital as we can and put it into apartments. And we do that because of all the benefits that that you teach in your programs, that your investors invest with you for, right? We do that for the depreciation, the appreciation, the amortization, the long-term wealth. So the strategy is make as much money as we can over here and put it into as many of apartments as we can over here.
I love it, man. And I think it's a simple formula, and at the same time, most people don't do it. Like I was guilty of just going all in on just buying long-term things. I wasn't taking acquisition fees. I wasn't taking, we didn't in-house manage, so we didn't have any real income early on. And I was very paper rich and equity rich, but I had zero cash for several years when I first really started rolling in the business. Up until I had a couple thousand doors, I didn't take an acquisition fee. And then at the same time, I've seen many, many business owners who build these transactional businesses that generate massive amounts of cash, but they're not building the long-term wealth. And, what you've been able to do is stay on what your core competency line is, right? You're not getting a degree, 2 degrees, 3 degrees, 5 degrees away. You are 1 degree off of what your core competency, what your long-term goals are. And that is the only place that you go, and you're not getting distracted by other things. You're not getting into crypto or e-commerce or Forex or like all these other different get rich type things or traditional businesses. Dude, you have a construction business. You want to build long-term wealth through your holdings, and you realize you can make a substantial fees and commissions by building to sell or building on a fee base for other people, keep food on the table, and then be able to fund all the long-term holdings. The long-term holdings now offer depreciation, which offsets the earned income from the other business. And then you talked about the principal pay down on the amortization, the rent growth and appreciation. And all of a sudden you pick your head up, man, and you're not needing any cash flow from those long-term holds initially. You're able to pick your head up in 5-10 years from now, though, and have pretty substantial cash flow, where now it could give you the opportunity to then walk away from the transactional stuff if you wanted to. But the reality is the transactional stuff also keeps the momentum going, right? Like momenticize, that's your whole business. By keeping the momentum going, you're keeping the crews busy. You're keeping the investor money in play. Right? You're able to get better pricing on your materials, better pricing on your labor. You're sourcing better deals because you're always looking for those opportunities. And there's a lot of things that play off of each other where maybe you don't get as good of multifamily deals if you don't have the transactional business as well.
Yeah, 100%. I mean, you couldn't have said it better. And I would be lying to you if I didn't get the entrepreneurial shiny object syndrome, right? But the discipline. So I do get that. I'm entrepreneurial. So I hear an idea and I get excited. But as I've grown in the business and as I've gained some more experience and as I continue to just look at the people who have been extremely successful, right? Getting rid of that shiny object syndrome and staying single pointed. You can be a couple degrees off, just like you said. So you can be in the investment side and the property management side. You can be building single family spec houses and be building apartments, right? So you can stay in the same vein, but I would be one, lying if I didn't get the shiny object syndrome. And two, it's the discipline of coming back and saying, hey, we're going to keep the main thing. Charlie Munger said it best. Don't interrupt compounding unnecessarily. That's the same thing for skills. It's the same idea for skills. So if all of a sudden I'm, 5 years into building my general contracting business, and then I'm like, hey, I want to go, like you said, do crypto or go do something else. Now I have to redo all that, everything that I've been learning, all the lessons, the daily challenges, all the little things that you go through, operational lessons, just like you were saying, even in regards to initially, you didn't even have management fees in there. You don't know what you don't know, right? So you're going through, you're putting all these great deals together, and we just don't know. We had the same. I'll tell you a funny story. Even in my general contracting business, I used to put the way it works, right, is we run on cost plus. So you get all of our subcontractors, and then we get a fee. We get paid a fee to manage them, put it together, and warranty it, right? Well, I used to put my GC fee I'd have all my costs, I'd have my GC fee, and then I'd have a contingency for any scope gaps, anything that happens. Every project, nothing goes exactly to plan. Well, I ran that like that for like about 2 years. And then finally I was like, we're just reflecting on things. And I was like, something's off here. All we had to do, like, we did the same amount of work. Everything stayed the same. We just moved the GC fee from above the contingency to below the contingency, because we still, even on a contingency, we still have to buy the material, manage the labor, warranty the labor, right? Anyone that would be like, you are so stupid for not doing that. Well, I just didn't know what I didn't know, right? So for 2 years, I operated simply like that. And the point of that is, as you're growing and as you're working on things, you could say you have everything figured out, but every day we're still trying to just get a little bit better. We're just trying to get a little bit better at what we're doing, both in our business, our operating business, in our investment strategy. And so the idea of not getting that shiny object syndrome and just staying in your skill, whatever you're good at, staying in that skill for a long period of time. Everyone I've studied that's become massively successful, it happens in that like 10, 20, 30-year period of sticking with the same thing over and over, because just like investing compounds, so too do skills.
Dude, skills, the time, the connections, the resources, right? Like going into multiple markets, you're starting over again. Going into different asset classes, you're starting over again. Going into different businesses or different money-making opportunities, you're starting over again. And so the more you can reduce that timeline by just staying in your lane or adjacent to your lane, by being able to then piggyback on all the resources and all the connections and all the people that you know, and that can already help get you there. That's the only way I look at opportunities anymore, right? If I can't directly impact with my existing team and my existing businesses the success of whatever this new opportunity is, and I can't use it in my current businesses, then I'm not even looking at it. It's not that it's not a good opportunity. It's just not a good opportunity for me. And it's not a good opportunity for my time to go and spend that. Because like you said, man, you've been in the game a takes time to create the snowball effect. And people get the snowball all built up. They do all the hard work, all the heavy lifting, and they get it to the top of the hill ready to roll down. And they're like, let me go make another snowball. And it's like, no, man, just like ride this thing and get some of the benefits of it. But we as entrepreneurs like the startup. I remember seeing the dude who started Starbucks come out and speak at a local university.
Yeah.
Dude, early on in my career, probably 15 years ago. And he came out and he sold Starbucks when there were 6 Starbucks in Seattle. And everybody's like, dude, what a dumbass, right? Like this guy could be a billionaire today if he would have just hung on to his shares and didn't sell out. And he goes, I don't regret it at all, because I like the startup aspect. I like the bootstrapping aspect. I like the excitement of getting things going. He goes, I'm an entrepreneur. I'm not a corporate business owner. And that was interesting to me because I like the startup and the excitement of the startup too. The issue though is if you're always in that startup phase, you're always in the struggle phase, you're always in that, getting kicked in the crotch and having difficulties and troubles and stuff, and you don't really hit the momentum phase. And so I've been disciplined in that. All right, I like the startup, but what is the new thing that I can spend a little bit of time on that feeds that itch, or scratches that itch, I guess, and but still maintains me, keeps me in my lane. So like we've been looking at things on where do we spend the most money in our business, and recently it's been insurance. Our insurance is through the roof, as everybody's is, especially if you're in the Southeast, especially if you're in a coastal area. Insurance costs have doubled, tripled, and quadrupled at some of our properties over the past 3 years. And, I never want to be in the insurance business, but the reality is I've always been forced into it because of my existing businesses struggling because of these expenses going up by so much, that I've started looking into insurance and creating my own captive insurance policy, which then I can bring my own properties in. Certain people from my mastermind would be invited in, and then certain people who utilize our smart management, property management software would be invited in according to, certain metrics of how well they manage the property, the quality of the property, and that kind of stuff. And so that's a business that I can create that's adjacent to what I'm already doing. It serves my existing business. It utilizes my existing network, and it can generate a lot more money, and it keeps me excited because it's something new that I get to work on. Does that make sense?
100%. There's shiny object syndrome that's distracting, and then there's problem solving, which is an entrepreneurial spirit, right? So there's, if you get shiny object syndrome and just change, that's just not being disciplined. But if you can see a problem, you're like, you wouldn't have thought about that insurance, like you said, until you got hit with that problem. And then you said, okay, because you have an entrepreneurial spirit, you're like, I'm not going to let a problem take me down. I'm going to solve this. And you brought your entrepreneurial spirit and you said, hey, I'm going to now solve this problem. It's a good vertical and it's going to create a win-win scenario. And then of course you go a step further because you're a great entrepreneur. You then also look at relationships, your mastermind. Who else can this help? Right? If I'm having this problem, I know others will be as well. So let's solve that from an entrepreneurial business way. So it makes perfect sense to me, and one thing I would want to just talk about, because we're feeling it right now, to gain true momentum. It takes, I think I feel blessed, lucky, and grateful that we're now feeling true momentum 5 years in, right? It could take 7, 10. I'm feeling right now lucky that we finally had the momentum, because it comes like this. You start and you're like, what's going to happen? Then you might be making more money than you've made before, but then you're working more than you've ever worked before. So you're really just created like this self-employed busyness, right? So you start, you're like, this is exciting. Everything's good to go. You're actually making more money than you've ever made before that you could ever make in a W-2. And then you hit a tipping point where now you have to decide, I've got enough work where I can hire an employee, and you have to start to work and learn about what that looks like. I had to go through 2 cycles because I wasn't the employee's fault. It was my fault of hiring people. Didn't have clarity on culture. I didn't understand what to do. I was just, anyone that would help me, I was going to give them a shot. Right. So you go from making more money than you've ever made to a long period of time, if you're going to reinvest in the business, where you're like, where is all my money going? Right? Like you go through ups, downs. It's the entrepreneurial day, right? Where you're like, hey, we're going to be rich. Oh no, we're going to go bankrupt. Just all over the place. And then if you can stick with that, and you can just maintain the vision, maintain the massive action, maintain the positive pivots through really challenging times, because you don't know what's going to come. You don't know if you're going to have a lawsuit or you're going to have a terrible accident happen at a job site. You just don't know. You can't predict that. But the momentum, like if you just stick with it, then all of a sudden when the momentum does happen, when the team finally, like you said, pushes the snowball down the hill, then ride that. Do not get distracted by it. And that's what we're in right now. We're in what I would call our biggest momentum push that we've seen, but it took 5 years. And I still think 5 years is kind of early. Like I would say, I feel very grateful that in 5 years, we're starting to feel a big momentum push. And so my only thing would be for people who are listening or who are still on the newer side, or maybe they're 2 years into the business, just stay patient. Keep on the massive action and don't give up, because your exponential moment, when the momentum comes, it doesn't happen in a linear fashion. It happens in an exponential moment, and you just have to stick with it until you hit that.
Go straight up, man. This episode of the Legacy Podcast is brought to you by the Legacy Boardroom Mastermind. So our goal is to give as much free information away as humanly possible through all of our social media platforms and try to help people with their businesses, help people with their lives. We also have something for people who want more one-on-one attention, which is Legacy Boardroom. Legacy Boardroom is a board of directors for your business. If you are doing up to about $10 million a year in gross revenue, you're making some money, you got some good things happening, but maybe you can't afford a C-suite of executives, of a chief marketing officer, a chief operating officer, a chief investment officer, a chief human resources officer, and you need access to these fractional C-suite executives. That's what this was built for, at a fraction of the price of what you could find anywhere else in the marketplace. So it's my actual team who have built multiple 7 and 8 and 9-figure businesses and real estate portfolios that is available every single day of the week on these daily boardroom calls. So any questions that you have, you can hop on, ask questions about operations to my COO, ask questions about acquisitions to my CMO, ask questions about raising private money to my chief investment officer, or team building to my chief HR officer. So they're available for you 5 days a week. Any questions that you have, any hurdles that you're facing, anything that you need, these guys are available to help you break through any sort of barriers and take your business to the next level, so that way you can build a business that is designed to feed your life and your lifestyle. So if you're interested in learning a little bit more, check out legacyboardroom.com. How do you maintain that level of confidence? How do you maintain that level of certainty that it will eventually hit. It will eventually land. When, like there's a lot, dude, we're both in multifamily, and in the multifamily mastermind space, the different masterminds, like there's one that was a big, single family
Yep.
mastermind that I know
Yep.
of.
Yep.
Very influential. They had a multifamily division. Dude, at their last event, one of my buddies said there were 3 people in the room for the multifamily breakout room. And this was a room that used to have 60, 70, 80, 100 people in it.
Yeah.
And now there's 3, right? And
Yeah.
everybody's back, or they all fell out, right? And so
Mm.
guess what? It's been a tough couple years for multifamily, right? Interest rates have gone up. Projects coming out of the ground that you had expected a certain interest rate and certain cap rate valuation 2 years later with interest rates, man, you're like, oh man, I'm not going to get that valuation. I'm not going to be able to get the appraisal, which means my leverage, my loan amount isn't going to be where it needed to be. And my exit strategy might need to change, or I might have to bring cash in order to then refinance and hold this thing and recapitalize it. Interest rates have gone up, right? Energy costs have gone up. There's been a lot of things that have thrown off multifamily, and more than anything, it's been horrible management companies all over the place. Third-party management companies are just evaporating more value than interest rates and insurance rates combined. It's just horrible, and it's embarrassing. It's like I'm dedicated to eradicating the planet from bad third-party management companies. That's what my software is meant to do. I want to eliminate the need for third-party management in the next 24 months with my AI property management software. So like it's a completely radical thought that you can manage something without any people or without third party, but I want to empower landlords to be able to do that with all the different tools that we've created in our software. And so, there's been a lot of hurdles, but going back to my original point is it's 3 years and it sucked for 3 years, but guess what, man? Like we're at the tail end of it. There's a lot of money on the sidelines. Like there's $1 trillion industry in commercial real estate, and there's $300 billion on the sidelines right now, waiting to be deployed into commercial real estate. So like people want in on it. There's a ton of demand. It's a proven track record that real estate works. And if you could just ride out a 3 or 4 year difficulty, but like now the people who are still standing will inherit all the opportunity out there because everybody else jumped when things got a little bit tight and things got a little bit difficult, and they went for whatever the easy route is or the comfortable route was. So how have you been able to then maintain that level of confidence and certainty, knowing that the momentum's going to come?
First and foremost, what I'll say is it's not easy, but if it was easy, then anyone would do it. Right. So because it's not easy, it's worth it. It's the same saying, like if it was easy, anybody would fucking do it. If it was
Right.
easy, anyone would be rich. And so we have to first understand, yeah, it's not going to be easy. So sticking with it, holding faith is not easy. And every time I go through a challenging time, this comes from, I think being in sports, I think one of the greatest things you can do, even if you're not going to go play professional, is being in sports. It teaches you constantly to reflect and you get all these life lessons. And so what I like to do when things get tough is go back to the fundamentals, right? Like let go of all the fear, everything that's happening with interest rates, everything else. I just like to go back to the fundamentals and just understand, like, why are we doing what we're doing, right? Stick to the fundamentals, because if you keep doing the fundamentals the right way, if you keep, if you don't stretch out of the fundamentals, if you don't try to do anything fancy, if you don't try to do anything crazy, if you just stick to the fundamentals, then you'll be able to work right through it, because it is the best game out there. So it's knowing mentally that it's not easy, but that actually is an advantage, because if it was easy, anyone would do it. And the people that want the easy path, like you said, they completely left the gate. As soon as it got hard, they're gone. So we're like, hey, thank goodness you're gone. Hey, because we're willing to work through it. So I like to get back to the fundamentals. I like to think about just setting up fundamentals, I would say, is key, right? So
You might just cut out again, bud.
did it really?
Nope. Now you're back in.
It's being finicky and touchy. We're good, right, or not? Okay. We should be good now. So you can hear me, right?
Yeah.
Okay. So in the development game inevitably, talking about fundamentals, the development game inevitably is risky. So we have to set up fundamentals that allow us to de-risk that. So how do we do that? I mean, because we're in a futures game, we're saying, hey, what's our future cost going to be on a budget side? what's our future rent going to be, and then what's our future debt going to be. Those are really the three key things that we're underwriting. And in new development, rather, you can't go back and do a trailing 12, right? We don't have a trailing 12 yet. We can just make comps. We can just try to understand what's happening. So on the budget side, what you have to really make sure is that you underwrite the deal. We like to run 3 scenarios. Pessimistically, I mean, stress testing. Pessimistically, we're way over budget. We're 30% over budget. Our numbers aren't right. We're 50% over budget. What's happening? Tariffs come in. What's happening, right? Can we absorb these uncontrollables that may come? So pessimistically, what does it look like? Then we like to say realistically, what does this look like? And realistically, the only way you can get a realistic picture is if you truly understand, right? So our advantages in the development game, we're in it every single day. Nobody can mess with us on pricing. I know what it costs to frame a house, to plumb a house, to do the drywall. I know what it costs. And by the way, I know the operational components. So I know what's happening. I know what levers we can pull. I know where we can value engineer. So becoming an expert is the only way that you can realistically put together what the picture will look like. So we'll say pessimistically, what's going to happen? Realistically, what do we believe is going to happen? And then optimistically, it's good to optimistically see, hey, if things are improving, what may happen? So we really work on those fundamentals and we try to de-risk. Like one of the hardest things, and I think a lot of the developers that are getting hurt right now, they had what we would call floating debt, or they'd have debt for the construction period, and then they wouldn't be able to get permanent debt until they were absorbed, and they have to be at 90% absorption, which right now all of a sudden what happened, there was a lot of developers developing, interest rates double, and then a lot of product came online, and so you had competition. So rents were now flattening, at least here, this is my area. I don't know what it was like, but rents, instead of being gangbuster high pro forma rents, they started flattening, right? And there was more competition, and it took much longer to absorb the product. The product still gets absorbed, but if you were like being really aggressive and you're like, hey, I'm gonna get this absorbed in 3 months or 6 months, and now it took 9 months or 12 months, if you didn't plan for that carrying cost, that hurts. And then if you had interest rates underwritten at 4% and now you're talking 7%, that really hurts, right? And so it changes the deal. So how do you go back to fundamentals? How do you de-risk that? Well, on those big deals where it would really hurt us if something went wrong, we just de-risked it. So we locked in, before we locked in our interest rate. So yeah, you pay a little bit more in points. We don't get the big cash out refinance, but we are able to get security in something that is risky or innately risky, you could say. We're able to now knock that one out of the park. So we pro forma our 84 unit apartment deal. We pro forma the interest rate to be at 6%. And I locked it in for 11 and a half years at 5.35%. Okay, good. We overperformed, under promised. We knocked that one out of the park. Then on the budget component, right? We build in a good enough contingency to make sure. So, you could do a 3% contingency, a 5% contingency, a 7.5% contingency. You can build whatever you want in. So we just build that in from an absorption side. We just build in a strong contingency to make sure we're good. And then you have to hire the right people. Now, luck is also part of the game, right? So we had this weird thing when we bid that 84 unit project out, we got a hard bid from our lumber supplier for all the lumber. And this is, again, luck. We just got lucky. Lumber prices were pretty high at that time when we got it bid out. All of a sudden, there was this weird dip right when we were ready for framing. There was this weird dip. The lumber pricing went down, and we pulled the trigger. We ended up saving I think it was like $300,000 or $500,000 on that line item. Now we had to be able to pull the trigger on it, so on and so forth. That's lucky. It can easily go the other way, right? So you can also have it be reversed. That's why you have to de-risk that, going back to the fundamentals, de-risk what your cost inputs may be. And then the third one, which you're very familiar with, and I had developer friends who were too ambitious on their rents. They were throwing out rents that were going to be very high, and we threw out rents that were, in my opinion, very conservative. So on that 84 unit apartment project, we were on budget, which was great. We're very happy about that. Then we locked in that debt. Like I told you guys, we went back to fundamentals, de-risked that. We thought it was going to be 6%. It was 5.35%. And then our actual rents were $100 more than we had pro forma. So that was a deal where all of a sudden now, instead of trying to make it work on paper, the fundamentals actually worked by de-risking it, saying, hey, this is a risky game. Let's de-risk it. Let's go back to the fundamentals and then let's make it happen. Then when the market shifts, for example, like we haven't put anything out of the ground now in the last 2 years because the interest rates are too high. It just doesn't pencil. So then you have to be in a position where you don't have land. If you buy land with debt, it's one of the rules we have. We don't do that because then you're just burning cash, right? Instead, now we own the land. We can just sit there and then we can create positive pivots. What are our other opportunities? So, my point on the fear would be you can be a lot less fearful when you de-risk yourself, right? And then you can fight through what's difficult when you go back to your fundamentals.
I love it, man. Those are all great takeaways. Yeah, I think the idea that risk, and you had alluded to this, in risk and luck. Risk and luck are two sides of the same coin. You can't really plan for luck, and real risk you can't plan for, right? It's like those black swan events, whatever. But majority of the things that people think are risky can be planned for, right? Those things like underwriting properly, putting contingencies in your construction budget, increasing your timeline, because we all know things always go over. So if you're expecting it to be done in 12 months, let's put it out 18 months, right? If you're thinking that it's going to cost you 10 million bucks, let's make it 12 million just in case. If you think that interest rates are going to stay flat, let's increase them by 1.5 points just in case. If you think rents today are where they are and they're not going to go down and they might go up, let's just leave them flat and let's see what happens. All right. And doing those things reduces the construction risk. It reduces the lease up risk. It reduces the financing risk, which are those major three things when, when you're in the development side of things. And so the reality is you can eliminate majority of that risk. And then you're only worried about these COVIDs and black swan events and 9/11s and things like that, which, are out of all of our hands. And so there's a lot more that can be controlled than I think we give it credit for. And so by being in the game longer, you're figuring out the things that you can control instead of pointing fingers of why things are happening to you. Here's the controllables. Here's what we are controlling, and here's how we can mitigate a lot of those risks from happening. That's great. So when you're underwriting a deal and you look at it from those three different scenarios, from pessimistic, realistic, and optimistic, if it falls, where do you do the deal, right? Like where in those three does it need to fall in order for you to say, yes, I'm going to move forward on it?
Yeah, the size matters. So on an 84 unit deal where where it's a big project, a major project, where if something goes wrong, it's going to hurt. Like a major project for us, let's say, maybe not for
what are you into that for? Like 150, 200 a door?
Like here in Oregon, it's a little bit more than that. We're like 225 a door, appraised at 275 a door. So that's where that lands here in West Coast Oregon component. So yeah, the in that case, the whole thing is pessimistically. First, what were your inputs pessimistically? Like, what did you say could go wrong? How wrong can it go? And are we okay with that scenario? Because if we're okay with the pessimistic scenario, then I think it's good to move forward, right? Because if we're okay, like if we would be okay and we still want to invest in the deal, if all these components go wrong on a deal of that size for us, then that's what made us feel good about moving forward. Because pessimistically, the worst case, what we believe was the worst case, we were still okay with it. We weren't happy with it. We weren't going to be excited about it. We were going to do everything we could to not let that happen, but we could live with it. We could live with the pessimistic scenario. Exactly.
If you could live, and that's like the barometer, right? Can I live with the worst case scenario, the pessimistic scenario? And if the answer is yes, then you're like, all right, let's go do this deal. Because the reality is we'll probably be a little bit better than that. We'll probably be more in the realistic range. Could get lucky and be optimistic. But if I can live with the worst case scenario and say, this is a great property in a great area that we can hold long term. Hey, maybe we don't get rich off of it, but this is a solid base hit today and could turn into a double, triple, or a home run in the next 10 years. You're moving forward on it.
Yep, you said it perfect. So that's the key one. And I've broken the rules on the other side. I'm still learning. I bought some lots. Like we use just simple back of the napkin rules. Like one of them that we use for single family houses is we don't want to pay more than 20% of our finished value for the lot. So let's say, for example, we're going to sell it for 400,000. We don't want to be buying the lot for more than 80,000. That's kind of the rule of thumb component, right? Well, I broke my own rule of thumb. What I should have paid for the lot 90,000. I paid 100,000. That's the first mistake I made. I thought, hey, I'm going to buy 5 of them. They did a land subordination on one, so that was good. Where meaning a land subordination means they brought the land in, I paid nothing for it, and so there was some creative side. But I broke my own rule. Everything had to go right in this deal, right? So I had to have. I couldn't have my budget. My budget was tight. That couldn't go over. My timelines had to be really good. My Because I paid too much for the lot, I already broke that rule. Pretty silly, right? So I took $100,000 bath on those, and I learned a ton of lessons. And the first one being right away, like I knew when we were doing it that I was pushing the limits a little bit. That those things had to go right. And sure, I can point to the comps that were going right, because we were able, like the comps did play out how we were talking about, but I didn't stress test it the proper way. And I broke a simple fundamental rule, which was I paid 10 grand too much for the lots on each lot. So I paid 50 grand too much. That simple rule. That means you broke your fundamental.
Half of your loss right there.
I broke the fundamental. So follow the fundamentals, right?
So why did you break it? Looking back,
yeah.
What was the impetus of saying, is it ego? Is it too much confidence? Was there too much momentum where all of a sudden it threw you off? Was it, I've had people chirping in my ear, take my money, take my money, take my money, deploy my money, go buy something. Here's my money. And you're like, you hear that enough, man. And you get brainwashed into like, all right, let me go and do a deal. And it almost forces you into doing a marginal deal versus like being selective for the best deal. I've also been down the road of gotten so confident that everything was going well. It's all going to keep on going well. And I just keep on adding things to my team's plate where it's like, dude, stop, right? We got to get these other deals to the finish line before we take on any more. I've been through all those growth phases. What do you think it was for you that you did those deals, that you broke your own rules, knowing you were breaking your own rules and everything had to go right? Why would you do that?
Yeah, 2 things happened there. One, I actually walked away originally when we couldn't come to a price, and they sweetened the pot by doing that land subordination that I told you about. The thing about that though, land subordination thing though is it didn't change my land basis. I just got like, oh, that's so good. I got a free lot, right? Or a free lot. My basis didn't change, so I was like, hey, creatively,
You still got to pay for it just later.
Exactly. And so that was one. And then 2, we were in a slow period. I was like, hey, I'm going to be able to get these out of the ground. The team was in a slow period. So I wanted to put more product in front of the team to be able to build. Right. And so I had those two pressure points happening. And I thought that at that time as well, in that community, nobody was building. I had a bet that the market was going to improve. Things had really been tight. And I had a bet in my head, like, hey, the market's going to improve. It did. We ended up moving the product, but then at the same time, so some of the uncontrollables that occurred, we had a good product, everything ended up working out, but we had a national builder come in. A big lesson I learned there is if you have a big subdivision with a bunch of lots and you don't control them yourself, you got to be really careful, because what we built and designed our product around was the existing stuff that was there. So we did what I would call it like high-end entry-level home. Right. So rather than cutting all the corners that a national builder may do, the other builders that were in there had done some nice stuff, some good comp. So we designed our product around that, which costs a little bit more, but then you get a little bit of a higher comp. Well, this national builder came in, bought 15 lots, and they built a product where they cut every single corner you could think, and that allowed them, they have more skill than us, but they also cut the prices by $75,000. They cut the sales prices by $75,000. So all of a sudden you're in a position where you're in the dance. What do? Do you lower your product to that level? What has to happen? You just have to do price discovery and not get too emotional. I think that the key component is, once you've made a move, let's say you realize you're wrong on your bet, don't get all emotional. Don't let your ego get in the way. Just reevaluate, reanalyze the deal and make the best move now. Because I think that could get in the way, right? As if you hold strong, or you've got your ego that gets in the way, or your emotions get in the way. It is what it is. You made the bet, learn from it, make the adjustment and move forward. And then don't like one of the things that does happen is you start to ask yourself, like, am I even good at this? And blah, all the little insecurity BS stuff.
Yeah.
That's not true either. Just learn, move forward. And then if you just don't let it happen again, that's the key. And, the bet, if that 100,000 were to take you down, then you've probably not done a good job. It's the same thing, like pessimistically. It goes back to, I broke the pessimistic rule too. Like I didn't even really do a good enough job of stress testing. Like I just didn't treat the deal the way it should have been treated, and I took 100,000 bath for it.
Here's the good news, man. You did it on $100,000 loss, not a million
Exactly.
or 100
Exactly.
million or a 10
Yep.
million or a five. Like, dude, that's a great lesson to learn at a very low price point, right? Like that could cost you a lot more money
Yeah.
5 years from now than it did in this scenario. So it's like, dude, take those settlement statements of the checks you had to write, friggin' frame them and put them up on your wall so that way
Yeah.
you never make that mistake again, and it'll
Yeah.
save you millions of dollars in the
Yeah.
future.
And that's a great piece of advice. I'm actually going to tell the team to do that because,
Yeah.
yeah, and I think it goes back to the, you know, once you set the parameters, don't break the fundamentals. And if you do, you may end up being in the scenario we're there. And then make sure you live the growth mindset. Like, you know, just learn from it and then move forward. Know that you're still in the best game. You're still, you've now actually, rather than saying the tune of like, hey, I'm not good at this, it's actually, I just got better at this, right?
Mhm.
You can look at it two ways. You can say, oh, I don't know what I'm doing, or I'm not good at this, or I lost 100,000. Or you could say, like you said, I actually saved myself 900,000 because on the $1 million deal or the $5 million deal, I've now learned this lesson. And so you can just reframe that. That's what a great entrepreneur does, right? Is they take a situation that is challenging, that maybe would make others crumble, and they reframe that into something that becomes a lesson or a positive pivot to move forward.
I agree, man. I agree 100%. So where are you seeing the development world right now? Are you guys, because there's all these statistics out there. There's a desperate shortage of housing, especially affordable or like a workforce type housing. But at the same time, these costs, man, like cost you $225,000 to build an apartment, right? That's multifamily. Like you can't build a single family home for under 350 anymore, which means majority of the population can't afford to buy a home. So there's 4.5 million housing units short today.
Yep.
There's supposed to be a deficit of another million per year for at least the next 2 to 3 years. That's
Yep.
going to put us around 7 million housing units short over the course next couple of years. What are you guys seeing in the marketplace, and how do you see kind of the market shaking out? You have your own podcast. You invite on a lot of smart entrepreneurs. What are the conversations that you're hearing and having?
Yeah. Macro, I believe a renter's nation is coming for the exact reasons that you talked about. I think affordability is an issue. And I think that there's multiple layers within that. But I think that a renter's nation is coming for the United States of America for affordability, for some is just the new generations have a different idea of what the American dream is. Now, this could pivot, shift, but right now, that's the trend that I foresee. What could pivot or shift that from a macro level would be innovation in technology. So robotics, innovation, technology allows the inputs of a home to be much cheaper. So that could shift that trend. But macro, I see a renter's nation. Start there. And then on a micro level
Let's
right
let's
now,
talk about that real quick because
yeah,
I
yeah.
I do think something's got to break. There's got to be
Mm-hmm.
something, and I think a lot of the conversation has been around what's the government going to do? Are they going to create some sort of grant program? Are they going
Yep.
to create some sort of better financing product so that way people can have a 40-year mortgage or 50-year mortgage and they sell it based
Exactly.
on that, right? Like that's a very real thing. And you've
Yeah.
seen it in some parts of California and some parts of New York City where there are 40-year mortgages.
And in
And
history. And in history. We did it in history. Think about it when everyone came back from World War II. So, you're right.
like and so that's what a lot of people, but I think that's what a lot of people are focused on. I do think something's going to break. I think the construction costs are so high and labor
Mm-hmm.
costs are so high, and all this technology, man, is like, dude, I just saw the former CEO of Google on an interview, and he said that a single computer will have greater knowledge and insight than the sum of all humanity, 8 billion brains in a single computer within the next 6 years. That's the timeline. So like every engineer in the entire world, every architect in the entire world, like you just tell your computer to do it and they can design the entire apartment complex and they can make sure it meets all different zoning and permitting and planning, and they can look for loopholes in the code, and they can like do all those things. They can hire the contractor, they can manage it, they can handle the payment processing and invoicing and lien waivers, and dude, all that stuff can be done by a computer in the next 6 years, right? And so the one thing technology hasn't been able to do yet is we thought it was going to take away like these manual labor jobs. The technology is not there for that. It's taking away the blue collar job, or I'm sorry, the white collar jobs of doctors and attorneys and title companies and engineers and architects and all those things.
Creative ones too. Interesting enough, creative ones too. Copyright, art, some of the graphic art.
Yeah. All those. And so what happens, right? And do we ask AI to go and find a way to build lower cost things? How do we find lower cost resources? AI is, running algorithms on different scientific diseases, right? To find different cures for diseases. And they're able to do it at a lower cost and able to do it with a longer shelf life for some of these medicines, and without an expiration date and like all those things. How does that get then conveyed into real estate and building and construction? And are they going to come up with like, dude, I saw the documentary on mushrooms, right? And it's called Change Your Mind on Netflix. And in there, this dude started a mushroom farm based on wanting to grow psychedelics and sell psychedelics, right? But it turned into all these other different ways of monetizing mushrooms. Like one of those things is there's certain mushrooms that they've been able to then grow that are poisonous to ants and termites, and they use it for extermination purposes. And they just spray it. It's organic. It doesn't kill your dogs. It doesn't kill your kids if they're going and crawling in the yard. It's an organic extermination thing made of mushrooms. They also say that they can take these mushroom spores into outer space and grow mushrooms that are substantive enough to use as building materials. So you don't have to actually go and take building materials into space. You can take mushrooms into space and build communities out of these mushroom, right? Like insulation. So like, is it something like that? Is there some solution along those lines that ends up happening? I feel like something's got to break. What are your thoughts?
Yeah, I think innovation bucks that trend we're talking about, right? So the innovators of tomorrow will completely change that. And I think that technology has been deflationary to certain things over time. So whatever they come up with, I do agree that could buck that trend, that renters nation trend. Now there's other things that can also do that. If the government can get together, the whole game is a simple supply demand game, right? So one of the things that is increasing the cost of homes right now, as much as people want to say it's greedy developers, it's actually the incompetence of the municipalities that are behind it. So for example, it's so difficult to be able to bring out a project to life because it takes so much time. It takes time in approvals, it takes time, and there's just much regulation. Oftentimes the code that has been put in place to protect the neighborhoods and the people has no common sense behind it, and is worsening the product that we're forced to build. And so there's a serious challenge that's happening there no matter what. And on the positive flip side of what gives me the biggest headaches would be, it also gives communities the best opportunity. If you had deregulation, so if it was easier to be able to rezone land or bring land into the community, let's say you have this technology now where cost of building has come down. The other input challenge you would have is, well, we need more land. The faster that they can bring land into communities or be able to rezone land or go with more density on land, the better off that cost of land would be, right? So I would say the technology would completely buck that trend I told you of a renters nation, along with the reforming of regulation around permitting, right? There's and it's simple little business things that you could do. For example, when a plan's being reviewed and it changes municipality by municipality, but here we'll have, it's so incompetent that we'll have multiple plan examiners examine the plans. And let's say, for example, that we had a 2-inch diameter tree and it's supposed to be a 3-inch diameter tree. They'll kick back. What they should do, if you had a private business, you would just say, change to 3-inch diameter tree to be reviewed at inspection. Approve the plans, we can start building. Instead, they kick that back to us. Then we get it done in 24 hours, resubmit. Then they take 2 weeks to come back to review that, right? You know how much building we can do in 2 weeks? Do you know how much we can get done in 2 weeks on the private side? And so I would just say that the two that could adjust that macro trend would be, like you said, technology, and then reforms in regulation, because simple supply demand, right? If you can open up the ability to provide more supply, that'll create a better market equilibrium. So
agreed. And guess what? That 2 weeks of time gets passed on to you, but it really gets passed on to the renter and the end buyer, because you have to just make sure that you're building that in, the holding cost of dealing with the municipalities. And so that's what's costing all this additional money. It's not like the developer is just eating it. It's getting passed on to the end consumer, which is why these housing prices are so much. So you can't get mad at the developer. They're just the last face that the consumer saw before. But the reality is all these other things that fed into it. I do think there's going to be a big movement toward like renewable energy and stuff too.
Yep,
and
100%.
you see solar is coming down in cost pretty considerably. And it makes sense because solar's coming down and energy costs are actually going up. And so now it makes sense to implement some sort of solar and battery backup as those technologies improve and increase over time. And I think there's going to be a lot more of that over the course of the next, because if you can reduce or eliminate that line item altogether and start digging wells instead of using public water and having septic instead of some apartment buildings and stuff
it might help with your insurance bill.
Yeah, right. Self-insurance in some capacity, or there's going to be huge reform in insurance. I know that's coming. And at the very least, we're going to start our own, right? Like it's a controllable that has been out of our control, but we're like, let's create some control over that. And the other thing is there's going to be a big movement of money out of traditional stock market type stuff and into alternative assets and alternative asset funds. It's already kind of gotten started, but I think there's going to be a massive wave of that where now people are like, oh, well, I don't have to have my money in the volatility of the stock market. I can move it into this debt fund over here that then invests in real estate. The more money there's available now to lend on real estate, now we're not paying 10, 12, 15% after all the fees and processing and rates and everything else that comes with construction financing. That's going to be able to put some pressure on it where we're able to pay mom and pa investors, right, a better return than what they're making in the stock market, and at the same time create more competition amongst lenders in commercial real estate, which is going to push rates down a little bit, and it allows us now to build at a lower cost because the holding cost and carrying costs aren't as high either.
Yep, I could not agree more. More.
So a lot of good stuff happening, man. I think there's nobody really likes a recession or a setback or tough times, but that's when the biggest breakthroughs happen. That's when the biggest companies are made, is in the Great Depression, is in the difficult times, because it trims the fat, gets people back to thinking efficiently and effectively, and then creates inspiration and innovation across different industries. And that's what we're seeing right now in commercial real estate. I think there's going to be a big movement, man, in a lot of different prop tech type stuff, and our management software and a lot of AI type. Just dropped my coffee.
That's awesome.
But a lot of good stuff coming. So, dude, this has been a fantastic conversation. I love chatting with you. We gotta connect in person at some point soon. Before we go, where can our viewers connect with you? Where's the best place to find you and chat with you and follow you?
Yeah, I agree with Tim. I had an absolute blast. You can follow us along at the Dirk Van der Velde, and that's across all platforms. We're doing a rework right now. So we revamped, talking kind of on the shiny object syndrome. We revamped the strategy, let's say, of what we're doing. So we've gone away a little bit for a moment to get just an idea of where we wanted to head next. I got some clarity on that. For me, the education side, although I loved it with the people, it was draining my energy rather than adding to. And so now you'll see us rework that a little bit, but we'll be coming back in action. It's at the Dirk Van der Velde. We'd love to connect with you. We're obsessed with real estate. We're obsessed with it. And we like hanging out with people who are obsessed with it as well. That's why we're on there. We know that we're one relationship away from changing our entire life. And I believe that that is what the power of social media is and what it should be used for.
I agree, man. We're on the same page there. Well, brother, I appreciate you being here. Thank you for all the insights. We'll make sure you're tagged in all the different show notes. And don't be a stranger, man. We'd love to have you back at some point soon and try doing some deals together.
That sounds great, Tim. Hey, we're super inspired by what your team are doing, both for people and for yourself and your investment side. I know that the Legacy family is a phenomenal group that is really about real world connection and education. And from everyone I've touched base on, people I care a lot about who are part of your program, they say it's the best thing they've ever been a part of. So, I think that anyone who's thinking about it, they should definitely talk to your team. And then me personally, you're ahead of where we're at. So it's just great to have somebody that can inspire and energize you to rock and roll and build your dreams.
I appreciate you, brother, man. It means a lot. So thank you guys for being here. And until next time, we'll see you on the Legacy Podcast. Hey, well, thank you for being here. Hopefully you got a ton of great value out of this episode. We try to give as much free value as possible across all of our social media platforms. So please make sure that you're connected with us. We are at Legacy Wealth on YouTube. We are at Tim Bratz on all other social media platforms, and we're available anywhere that you listen to podcasts. The best way that you can support this podcast is by just subscribing to our YouTube channel, by liking the video, by commenting on it, and by sharing it with anyone else who might get some great value out of it. So thank you again for being here. We'll see you next Sunday on the Legacy Podcast.